Thanks very much for coming. Good afternoon. So as I was introduced, my name's Ari Last. I'm from a company called Marketinvoice. We're one of the leading alternative finance players in Europe at the moment. And what I'm going to talk about today is a few things really. One is to give a general overview of the rise of alternative finance in the UK. So non-bank finance, predominantly new online forms of lending for SMEs in this country, and give you a little bit of an overview to that. I'm going to dive a little bit deeper into Marketinvoice's solution, which is a very new take on traditional invoice discounting and factoring, which I'm sure a lot of you in the room have experience with. Dive into a little bit of a case study. I'm not really sure what's happening with my numbers there. I think that's doing it on a Mac sometimes screws up some of the formatting. But we're going to talk a little bit about our integration with Sage and how we're actually plugged into Sage 50 at the moment, and how Sage 50 clients and their advisors are using Marketinvoice to draw down on working capital rapidly. And we're going to talk a little bit about how it's priced and how we work with accountants. So first and foremost, you know, the rise of alternative finance is tremendous over the last few years in the UK. So there was every year there's a big report done by Nesta, which is the government innovation arm, the University of Cambridge as well, and they do a deep dive into the growth of alternative finance in the UK. And really it's kicked off, you know, in the midst of the banking crisis, you know, 3-4 years ago, and there are now a number of different providers and new niches of alternative finance that have sprung up to fund UK businesses and UK consumers as well. So the growth, first and foremost, is enormous. On the right-hand side, you see, you know, annual growth rates in terms of funding to businesses in this country via these forms of finance, and it's more than doubling year on year. That 1.74 billion number was 2014, and it will more than double again. So there are an increasing number of UK businesses who are not turning to their bank, who are actually turning to new forms of finance to get money into their businesses. And really crucially, I think, particularly for the advisory community, and we speak to a lot of them at Marketinvoice, it's raising awareness of the different forms of alternative finance. I think sometimes there's like an umbrella piece of non-bank alternative finance that is bandied around, but people don't actually understand the different niches of finance that are now available for companies. So down the bottom, I appreciate it's probably a little bit difficult for you to read, but you have peer-to-peer business loans, which is essentially a term loan offered by a bank, but crowd-funded. Essentially, any person on the street, person or institution, is putting money towards businesses who put a pitch up online. They need a £100,000 loan, and they get crowd-funded by the crowd. The advantages over a bank is it's much quicker. The rates are a bit better as well. So that's term loans kind of moved online via peer-to-peer finance. You have peer-to-peer consumer lending, which is the same kind of thing, but for individual borrowers. You have invoice trading, which is what Marketinvoice does, which is that new take on factoring or invoice finance. You have equity crowdfunding. So if anyone had the pleasure, particularly on a hot day, of going on the tube at the moment in London, you will see a lot of adverts around. There's Crowdcube, Seeders, and that is more for startup businesses looking to raise equity finance from the crowd, and that is where probably there are the biggest number of players in the market. But it's for companies at different stages. That's for early stage companies, you know, sometimes even just ideas and pitch books looking for equity finance. So lots of different forms of finance. That's important for people to understand. But actually, alongside this growth, which is impressive and something to shout about, I guess, the big challenge the whole industry has at the moment is education of SMEs, and a real lack of awareness amongst business owners of these new forms of finance available to them. So particularly when I work in the industry, and you know, it has a lot of fantastic press coverage on a weekly basis, a lot of government support of new players like us, you think everyone knows about it. But actually most business owners that we talk to across the country, they go straight to their bank, they don't really have an understanding of the new forms of finance available to them, and that's the big challenge I think that the industry faces at the moment. And that's where working with the accountancy and advisory profession, whichever player you are in this market, it is recognized that actually how do we work with the accountancy profession to instill in them the understanding that they can then arm them to take to their clients. So awareness is very low. If you look on you know, the average, maybe 44% of businesses, SMEs, are aware of these different forms of finance. Only 9% of them have used it. But actually, when we're talking about business funding specifically, so peer-to-peer business funding or invoice trading, 60% of businesses aren't even aware of the new forms of finance available to them. So that's a very big challenge that the industry faces if we're really going to see mass adoption and penetration. So what do businesses currently do? Well, they go to their bank, and the real tragedy is when they go to their bank and their bank says no, they have no idea where to go next. So some statistics which bring this home, which form part of that report, and some government and PwC statistics as well, is that 88, I mean, this doesn't surprise me much, that top stat, 88% of businesses applying for a loan, they go to their bank first and foremost as the first port of call. But what's happening at the moment is there is a lot of rejection going on, either of overdraft, particularly of overdraft applications. If you're an SME turning over less than £15 million, they're looking to cut your overdraft and actually move you into invoice finance. Loan applications are also being rejected in quite high amounts. And particularly if you're a first-time borrower from a bank, the bank is tending to say no. And sometimes they have legitimate reasons too, but the reality is business owners then don't know where to go. And one of the ironies is there's a lot of talk at the moment, and there has been, around this banking retrenchment and a lack of financing options for businesses at a time when there's actually never been more credible sources of finance available for businesses than there are today, largely because of the innovation and the new forms of finance that have sprung up to fill the vacuum caused in the financial crisis and this banking retrenchment. So the idea here is to kind of set the scene is there is this massive movement going on at the moment, exponential growth rates of new innovative forms of finance that businesses are taking up. It is happening. That's why I'm excited to work in the industry, because I think it's a hugely disruptive force in the industry, and in 10 years' time, whether your business is or a person looking to raise finance, you'll be doing it a completely different way, much like we've seen other sectors like travel, leisure, gambling, etc., move and be disrupted by marketplace technology. That's what's happening in finance now. At the same time, though, we still have this knowledge gap of businesses in this country. So, Marketinvoice, to hopefully give you an idea of why we're qualified to talk on this subject. This is we're 4 years old. We've funded now close to £400 million of invoices to UK companies since then, but that's predominantly been in the last 12 months. We have, and I'll talk about how the product works in a bit more detail, but we have the UK government. I talked about the government support of this sector. So the government, via the British Business Bank, which was newly set up about 6 months ago, is pouring tens of millions of pounds to be invested in SMEs, either in debt or equity, through platforms like us. So we have a war chest of £40 million of national government, and we have local government money to be used and invested in businesses who use Marketinvoice, because they want to fuel the innovation that they're seeing and fuel the uptake of products like this. We're already working with hundreds of accountants in the UK. I say it's about 50% of what we do in terms of businesses using us comes via this channel, and we need to grow that channel. And we have an integration with Sage 50, which I'll touch on a bit later, which allows for very, very rapid funding for your clients. So what's the problem that, we launched 4 years ago? What's the problem that we're here to solve? And some of you will obviously be very aware of this working with your clients. There is a three-pronged credit squeeze going on at the moment, and it's ongoing. It's been going on for years. One is what I talked about, general banking retrenchment in the SME sector. Withdrawals of overdrafts and high rejection rates. The second is, the other side of this pinch for businesses is the trend of payment terms getting longer and longer from their larger suppliers. There are initiatives underway to try and curb this, but it doesn't really work. And if you pick up the front page of the Sunday Times most weeks, it's another story about another corporate that has extended payment terms to suppliers. It normally happens after they go through, a rocky annual report, and a very quick way to boost the share prices to hoard cash, and to do that, obviously, extend payment terms to suppliers. So there is this ongoing trend of payment terms getting worse for businesses at a time when they actually can't get the money from traditional sources like they used to. Additionally to that, there is this Invoice Finance product, which is one of the oldest oldest bank products invented. I've heard it's something like 4,000, can be traced back to the Mesopotamians 4,000 years ago who used to do factoring in the markets. But actually, it's very much underused in this country. Only about 5% of SMEs actually use invoice finance or factoring for numerous reasons, but largely because the product is just not suited to their needs. It's very inflexible, it's very expensive, it's very onerous to set up, and it's not very transparent in how it works. Businesses don't like invoice finance, and certainly the advisors I speak to, a lot of them don't like necessarily pushing a business down that particular route. So businesses have this working capital problem in the UK, and Marketinvoice we thought of, well, how do we actually systematically eradicate these pain points one by one and offer a very new take on, it's not really invoice finance, just a new way of funding against your invoices, a very mainstream working capital product. So the way we've done this is, I touched on kind of the pain points around invoice finance on the previous slide, and one by one. So flexibility. The biggest reason we speak to businesses who don't like invoice finance and factoring is because it requires them to put their whole sales ledger through the facility. And if you're a business, like many businesses are, that is seasonal or project-based, or you have 80% of your revenues coming from only one or two of your largest debtors, it makes no sense to have a facility that you're paying on all year round and need to put all of your invoices through. So we pioneered the concept that you can trade individual invoices as and when you want to in a completely pay-as-you-go fashion when you need the cash. Speed is another. On average, it takes 6 weeks to get an invoice finance facility in place with a bank. We will do it in 24 hours. So we funded a £1 million invoice just 2 weeks ago from a client that registered on our site the previous day. So speed is something that us and any online funder has in their arsenal. We can get funds out quickly. We don't have a requirement for debentures and personal guarantees, and that is the first thing that a bank will look for when they're trying to put a facility in place. And we offer transparency. We are fortunate to have Harvard economics graduates applying for roles with us, and when we give them a factoring term sheet, they can't work, and we ask them to work out what the business needs to pay. 9 out of 10 of them can't do it. So we have a huge emphasis on transparency for the business owner around pricing. That's incredibly powerful. You know, price, which I'll talk on, isn't on here. We're very competitive on fees, but actually what we're finding business owners want to use us for is that speed and that flexibility and that transparency. That's what they really value. How it actually works is we're an online technology platform, Marketinvoice, and we have two sides of this marketplace. We have our funding. We're not funding anything ourselves. Our funding comes from our institutional investor base and sophisticated investor base. So we have a global pool of investors, hedge funds, asset managers, high net worth individuals, and the government putting funds through our platform, and we're connecting them with businesses in the UK that want to sell their invoices online and release capital up front. So the businesses using us, they come from all sectors. We are sector agnostic, and we have great diversity in terms of the sectors we do. A lot of diversity in terms of the size of these companies. So I wouldn't say we're a product for the pure startup, because you actually need some revenues and invoices to trade against. But we have companies who are very new, just getting their first contracts underway, and then we have some very large companies who are turning over more than £100 million raising working capital through us. We will fund invoices of any size to any debtor in the UK, and that was a change we made recently. Previously, we would only accept invoices if you were issuing them to a blue chip client, like a Tesco's or a Microsoft. But now, actually, if you are a B2B client invoicing another SME, we will fund that invoice as well. And this is really interesting, is that a lot of people instinctively, and understandably so, will just think we're this niche, you know, we're a new competitor for invoice finance. We are, of course, taking businesses who are in invoice finance over to us to use us instead, but 80% of our clients have never used invoice finance before. So that is the stat which touches on this point around, this is a mainstream funding solution that lots and lots of businesses who would never want to talk to you about invoice finance are now very receptive to. So essentially the platform works in the middle. Businesses apply online, they're qualified within 24 hours, they're then given access to an online facility where they can upload invoices for sale. Investors come and fund them, and funds are immediately passed to the business, completely online, end-to-end process, very, very simple. Try and break that down in case study for you, and I'll try and say it without sounding like a bit of a pillock, but Scaramouche and Fandango are a high-end men's bathware manufacturer. They export across the world. And they use Marketinvoice and a very, very fast growth company, and this is how they use us. They have some very large blue chip clients with very long payment terms, 60 to 90-day payment terms. They set themselves up with Marketinvoice very quickly. Every time they now raise an invoice to a John Lewis, we verify that invoice online with the John Lewis. It's all done online. And they essentially get up to 85, 90% of the funds immediately in their account that day. Step 2 would be 60 days later, John Lewis pay into the client account, and I can go into more details if people have questions on that afterwards. They pay it into this Marketinvoice client account in your client's name. We simply fund, we repay our investors who have funded that initial 90%, and we pass the remainder of the invoice back onto the business. And people like Scaramouche and Fandango, they are doing one invoice a month, one invoice a quarter, We have businesses doing all of their invoices every month through us, but the idea being that it is a very seamless, repetitive process, and it's self-service as well. So businesses and their advisors can log in any time of night really and load up invoices and draw down capital. Now, unfortunately and conveniently, I was going to show you a demo of the Sage integration, but I was informed by our tech team that the demo platform is down for maintenance. But we have a Sage integration with Sage 50, right? And what that enables, the power of that, is when a client goes online and they start registering for Marketinvoice, there's a button that says Integrate with Sage. They click a button, they enter their Sage login credentials, they hit another button, and they've applied to the facility. So what that integration is, a technical integration that we've done with Sage. It's incredibly powerful. What it is doing, the client is giving us permission to pull over the relevant data from their Sage account into the Marketinvoice platform. So when we credit assess a company in the first instance, what we're doing is we're looking for bank statements, latest financial statements, and other basic company information. Now, that normally is a 15-20 minute process, but it involves the client logging in online and uploading or pulling in other that information from other sources. Via the integration with Sage, in that one button, we have pulled that information, and it's immediately, their application form is in. It's a 2-minute, three-click process. Apologies for not being able to show you that now, but if anyone wanted a demo, I'd be happy to do one for you, either online via webinar, or we do a lot of these types of webinars and demos for accountants. So this integration is very powerful on the onboarding front. You can have a client, and you can do it on behalf of your client, who can apply for funding within 2 minutes. And then we come back to them within, to be honest, it's normally quicker, but our SLA for clients is within 24 hours, they have a decision on, are they accepted or not? What is their funding limit? And at that point, and what is their pricing structure? At that point, they have access to a platform, they can start drawing down capital. So that is a world away from 6 weeks of paperwork and meetings and audits with an invoice finance firm. The second nice element about this integration is, once they've integrated and they want to draw down funds, they log into their Marketinvoice platform, and what the integration does is it automatically pulls through invoices through to the platform that the client can fund in one click. So it's the onboarding and it's the ongoing trading which is incredibly quick and seamless for clients, and it's the clients using it with their Sage 50, either new clients signing up or existing Marketinvoice clients who then integrate. They find it incredibly powerful and convenient. So what else is it about us that I think businesses like? And again, this goes for Marketinvoice, but it will go for other forms of online finance. It's the fast sign up. It's all about speed. It's seamless risk assessment. So it's not meetings, calls. We can have meetings with your clients if they require it, but theoretically it's self-service and they can do it all online. We respond to every new inquiry within 10 minutes. Like I said, we will come back to you with a funding decision within as little as 24 hours, and we've won numerous awards for our customer service. That is the essence of the business. It's about customer centricity. Now, invoice finance still suffers for sure from a reputation and a stigma of being for businesses who are suffering and businesses in a position of weakness, almost like a last resort of funding. And this slide, what I'm trying to get across here, and what's really important, is to understand that the businesses using Marketinvoice, they are fast growth, ambitious companies. They're not, they don't have to be fast growth to use us, don't get me wrong, but essentially this is a growth acceleration tool for fast growth businesses. So of our customer base, the average revenue is 25% average revenue growth. 30% of every invoices we've funded are export invoices. And again, funding export is incredibly difficult with a bank, but with us, we will if you are a UK company invoicing debtors all over the world, we will fund that. Even if 100% of your revenue is foreign revenue, we will fund that revenue. And a bank won't. A bank will have 50%, sometimes even less, limits in terms of what it can be non-UK debt. If you're, again, hard for you to read, apologies, but I talked about being agnostic from a sector point of view, but over 50% of our clients are services and technology businesses. These are not companies. These are companies that they are the early adopters of technology, full stop. B, they are companies that will traditionally not be suitable for bank finance. They don't have the fixed assets that the bank will require. So if you're servicing these services, tech companies, again, online forms of finance like us are much more suited. And a part of that is down to how we credit check companies. So because we're a technology business ourselves, we're not just relying on an experience score, whether a company fails or not, our credit checks. We are pulling in, for example, we will fund people selling apps through the App Store, or Amazon sellers, or eBay sellers. Our data is pulling in, and we have a 100 data point risk system, is pulling in their credit history and their background and their track record from these online platforms. And what us and new online funders can do is actually we can assess the viability of a software company based on how many apps they've sold, or what the App Store is telling us that they've done, and our bank can't do that. So it's very well suited for these types of companies. What are they using funds for? It's varied. A lot of the time, yes, sometimes they need to make payroll. Sometimes they want to invest in R&D. Some companies are using us in a really clever way. We have a large travel business using us. Now they are in a fantastic cash position, but essentially what he wants to do is he draws down big on his invoices at certain times of the year, because what he wants to do is pay his suppliers earlier, right? It's guaranteeing their loyalty and exclusivity, so he gets one over the competition. Some companies, what they're doing is they're funding invoices for Marketinvoice for a margin, right? And then what they're doing is they're going to their suppliers and offering early payment for a margin greater than what they're paying us. So they're actually using arbitrage to make money on using Marketinvoice. So it really is used for lots of different reasons for companies in lots of different positions. Appreciate that when people hear of online finance speed, you probably think sky-high prices as well, and that's really not the case. To give you an idea of funding, on average with us, the client will normally pay between 2.5 and 3% of their invoice face value. So they trade a 100 grand invoice. In fees total, they will probably pay on average 2 to 3 grand of that. And it's 2 fees that you pay for using Marketinvoice. We take a processing fee up front off of what we advance. So if we advance you 90% on a 100 grand invoice, our fee could be around 1%. So you don't get 90 grand on day one, you get 89 grand. You've paid us £1,000. And then our investors are taking what is more like a traditional interest rate, which is on average just under 1% of whatever is outstanding. Now, again, customers using us, the thing that they really appreciate about using us is just transparency on fees. Every time they trade, they're shown exactly what they have to pay in 2 fees. And we had a big piece in the Financial Times only a couple of weeks ago about the hidden fees that Invoice Finance and factoring companies charge their SMEs. And actually, when you break it down, and it's very hard to break it down because it's very opaque how they all present it very differently, is what they're actually making is not their service fee and their interest rate, it's all the disbursements. And we've seen disbursement and terms and condition pages from factoring companies that have 35 different disbursement charges that companies end up paying for the facility, which they weren't expecting to. So transparency is really key. And lastly, what kind of service are we providing for the advisory and the accountancy profession? So first and foremost, it's an entire application process which the accountant can manage. You can log in online, sign your client up. There is the only point of interaction with the client. At some point, one of the directors needs to online sign our rules. But essentially, the whole process can be managed with the accountant. You can use the Sage 50 integration if you have your client's login details to do that very, very quickly. We provide you with an online portal which allows you to monitor the trading activity of that client in real time. When they traded, how much they traded, what price they paid. And what we're also looking to do with more and more accountants is we're on a big push to grow our brand in the SME community, and we do that. We have a pretty good marketing and PR team, and we're looking to work with accountants who are also looking to grow their brand in this fast growth SME community on content and marketing and partnership, etc. So that's it. Hopefully that gives you an overview of what we do. Like I said, we're based in Holborn in central London, but we have national coverage if any of you are in the north, for example. We're very happy to kind of come in, whether it's for yourself or if you work in a firm with other partners, and do an online demo of how it works, either in person or online. More than happy to do that. And if anyone has any questions, happy to take some.